Good morning, everybody. It's Tuesday, February 27th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll get to it during the show. Excuse me, real quick, overnight markets here had March corn up a penny and a quarter at 408 and a quarter. March soybeans were up 12 and a half at 1148 and a half, and March Chicago wheat was up 5 and a quarter at 582 and a half. We are through 17 of 20 crop insurance settlements. We've got a couple days left to go, and we'll have that spring price locked in. Corn currently sitting at 466, and beans are at 1158 and a half. This morning, also, the export USDA was out with an export sales announcement. 123,000 metric tons of beans to unknown for 23. Kick it over to the guys here this morning. Not a whole lot in the way of fresh news. Obviously, export sales. We had we were talking this morning about a big call purchase right on the open there last night in the soybean complex, which may have triggered some of the strength. And then, like we said, kind of a nice turnaround from our, trading towards the lows right off the open there yesterday morning, and then finishing higher on the day. So anyway, kick it over to the guys for some thoughts, and we'll move it around the room.
Yeah, just on that, on the call purchase, I think there's a little over 10,000 July bean calls bought shortly after the open last night. I think that pushed us up 10 to 12 cents early. If you've been short, like the funds have, obviously for majority of this move down, options have gotten pretty cheap. Could be something just covering some risk if we do have, sharp move higher or anything like that. So it's always hard to know what the motive was behind those calls, if they've been short them, if they're a new long, protecting a short futures position. It's just really hard to tell. But they came out early and bought 1240, 1260, and 1280 calls about 10,000 times, about a $10 million trade. Like we were joking this morning, hopefully it's Nancy Pelosi. That'd be our best chance of a bull market starting here. So other than that, I don't see too much fresh that we hadn't talked about already.
Absolutely. I was reading, it looks like we're that second crop in Brazil is getting put in pretty quick. They're about 17% ahead of last year. About 73% of it planted. So by all estimations, they're getting it in quick. And the weather still this morning, with a few dry pockets, but all in all, a pretty non-threatening forecast by all accounts.
Yeah, go ahead, Dustin.
No, after you, Ben.
I think that that's something to be concerned with as far as if things go well on a follow-on. But we're such in the early stages of that right now. Yes, it's good they're getting it planted. What is the follow-on weather? Looking at yesterday's price action, I saw a lot of people on social media kind of banging their drums that they called it and the low is in, and I would just be cautious of, kind of guarded optimism. That's until further notice, that's a relief rally. The timing on the calendar is certainly positive, as we've talked about heading into first notice day. And I think Justin's comments about options being cheap in big short positions, typically this can be advantageous to the producer should you get into certain structures and things like that you like on a rally. So I would expect to see more aggressive call purchases from these prices at this time of the year with a large short position. It's a really safe way for both the managed money to protect their shorts in the event something happens that would cause a mass exodus. That we mentioned last week that every day we get closer to having crops in the ground in the weather season, that the hole for an orderly exit gets a little bit smaller. So I think we can expect to see that, maybe stronger slopes, maybe some higher volatility. Grain markets, pretty common third week of February. Vol starts to pick up, and we've certainly seen that over the last 3 or 4 days. We've talked repeatedly about how we did not like certain structures and accumulators because the volatility was too low and the risk reward on them seemed not appealing. But should we continue to see bump in vols, it's something that we can probably revisit and at least kind of run the traps on it.
Yeah, just to add to that too, we've been talking a lot about, obviously costs have been stubborn to come down. So a lot of producers are below cost of production, both corn and soybeans. Unfortunately, in the short run, if the weather, ends up being good, all these sorts of things, do play out well. Both corn and bean prices are relatively overpriced compared to what the estimated, stocks to use ratios are. Right. So, there's a reason we've been, on the defensive on prices. We're all hoping for a rally or some kind of weather scare. But at the end of the day, 1150 beans is probably pretty juicy if we do have a 400 plus carryout. So there's a lot of things like we talked about that have to happen between now and then. And I think that, Ben, to your point, I mean, I could see why the funds want to be short futures and long, cheap options in case something happens. But if it doesn't, they've got they're pretty deep in the money on their position. So they can buy some cheap protection, keep that P&L either way and not have to be forced out on a rally. So I agree. I think that's a good analogy there.
Do we think the commercial is starting to control some of that cash corn now too? I mean, do we think we've cleaned up a good majority of this basis problem that we've been facing, these basis contracts?
I think a lot of it's gotten cleaned up. Thursday is the last day, and a couple major commercials will allow people to go till Thursday. If it's not cleaned up now, I think it will be over the next 2 days. I definitely think it's something that's been traded in advance, right? It's a well-publicized story at this point. And I also think that the difference from Dees to March is Dees to March, there was a lot of optimism. We were looking at the natural prospects of a seasonal rally off of, call it 480 corn. And over that time frame, it's not materialized. At the same time, the producers had to generate some cash. And so I do think that a lot of it is being rectified, but probably not all of it.
Well, one thing too to consider, to add to that is we are going into March 1st. So we're halfway through the crop year, right? So we've already used 7 billion bushels of corn.
Yep.
So we don't have, that's 7 more billion bushels, that we've worked our way through. So every roll, just by nature, just gets smaller and smaller with the quantity that has to roll these basis contracts. So we should see less of an impact. Now, if we have a flat price rally and demand really stinks for some reason, if there's a new crop scare, that could keep those spreads super wide if we can't really pick up demand here. If Safrina comes in good. But as far as just purely the farmer basis long, being the driver of the spreads, I got to assume we've seen the worst of that by the time we get past first notice day here.
Yeah, I agree. I think the skew against the farmer is flattening out. And from all the things that you just mentioned, that we're kind of halfway through the growing season, they've had to generate cash. So it gets a little bit more balanced every single day. Did note on the Ohio River yesterday that corn basis perked up a little bit, which is encouraging as well. It's been really poor for about the last 10 days. So hopefully we've priced ourselves in a place where someone's willing to step in and own it. This is also the time of the year where there tends to be another round of rail shipments out of the Midwest towards the Southeast when they in late February, early March. So hopefully we can get some of that grain moved out of the Midwest.
Yeah, and I would say too on this topic of basis only contracts, just as a reminder, basis only contracts can be carried long after the grain's delivered and used, right? It's a paper long position held by the commercial in the name of the grower until it's sold. And you'll see a lot of times if you deliver on basis, let's say at harvest, they're going to pay you out at some percentage. So the real conservative places that will offer a payment will be 50%. The more aggressive ones will offer up to 80% payment on those bushels. And they'll simply just take 80% of the value, the cash value at the time paid out. And then they'll retain 20% of that value basically to hold as collateral against the margin. And that's no different than calling up a broker and saying, I want to, put up money to go long futures at the Board of Trade. But they're requiring a lot more, right? 20% is a lot more than the Board of Trade would require. But still, we've had a pretty good outsized move here through a lot of those months. In October, we were trading above $5 during that time frame. We traded sub $4 on the March contract yesterday. That would actually surpass the 80% threshold, to where you might have been getting growers getting calls saying, hey, we're at negative equity on these basis contracts. Do you want to bring in a check? Right. That's a quick way to get people to liquidate. And that might have been perhaps some of that accelerated move lower as we went towards $4. It could have been a sizable portion of those contracts going actually negative equity.
Yeah, Dustin, to add to that, we talked about this yesterday, but that's, I think Dan asked me if I'd seen anything like this, and my answer was no for this time of year. And that's what it really felt like. It felt like a liquidating market when you're coming out of a summer market, bull market, and it rains everywhere in the Midwest and everyone's long and they're puking. That's what it felt like the last 3 or 4 trading sessions to me, which would make sense to your point. And we heard anecdotal evidence of some large commercials that were paying up to 80%. So, they might even have policies where they can't, an option to write a check isn't even there. You just get automatically, sold out. And then even then, who wants to write a check when you're at 394 down from 5+? You have enough issues. You really don't want to walk in with another check. So it wouldn't surprise me that we did see some of that. It certainly felt like it was strong sellers all day. It felt like the margin department was trading early in the morning. And the second that it, that it subsided, then we rebounded pretty nicely. So again, one day is not a trend. We'll have to see how we act over obviously the next week or so, but I think all those kinds of things would make sense in hindsight if we were to look back at this as a low.
Yeah. And sentiment, right? Sentiment's turned very bearish, but does anyone excited about selling corn today? Absolutely not. Right. So selling corn today feels more out of necessity from the major market participant. We keep talking about the grower, right? That's, I think, a lot of what's been driving the last month of move. Funds have already sold. They're continuing to sell, but they're going right into the time frame that growers are hitting that time clock where they're having to move a lot of corn as well. So I think sentiment did turn pretty bearish, but no one at this point, I think, wants to sell if there's not a clock that's ticking underneath them. If we get past this first notice day, that's where I think things may open up a little bit and ease up. It comes back down to, where's the fire? Is there a need for aggressive grower selling after we get through first notice day? I don't think so.
Yeah, I think as long as they've gotten their loan, right? I think all those, like we talked about, all those things kind of hit: rent checks, going into the bank for renewal, needing to free up cash, service debt, all those kinds of things. So, I mean, the thought was going to go into harvest bushels, move, the growers are going to lock the bins, right? They're not going to sell anything at these prices. Well, that was true. Unfortunately, it went the other way, and it went to a price where they had to sell just on the calendar, and like the cash flow needs. So I agree. I don't see another major need to sell cash after the crop's planted and loan, unless there's, until the crop's a little bit more known or some of those things.
Yeah, and I just got a text from a customer here as well. It's a very good point. Also, grower had to sell 20% more corn at $4 to get the same revenue than he would have at $5, right? Which is another great point, Matt. So thank you.
That is a good point.
Yep.
Oh, very, very good, guys. We're going to be coming into the open here shortly. We got Rylan back today. Welcome back. And
thank you.
Yesterday touched briefly on cattle on feed from last Friday. Placements clearly being, I think, kind of the big surprise to the market. But what are some thoughts here, Rylan, especially after seeing yesterday's trade and where we're going the rest of the week?
Yeah, I mean, like it was kind of happened exactly as planned. They call it the cattle on fade report for a reason, just because it was definitely, placements were higher than expected. But let's face it, like it wasn't exactly a bearish report from a supply standpoint. Still quite a bit supply wise, placement wise, well below a year ago levels. So it just kind of reinforces this degree that, and the narrative that we're still really tight. So like we're hand to mouth right now. And like, even though the packers are reducing kills, beef prices are back up. We got choice back over $3. So, I mean, like we're kind of playing the season a little bit. I don't know how much more room to the upside we're going to have immediately, just because it feels like, asking prices for cattle are going to be 185 to 186 this week. I mean, we'll see if these packers want to push it up there, but we're coming into Feb expiration. The board's right at 185. So I think the futures have kind of done their job unless there's some real surprise here. And the weather looks pretty volatile in the central regions here, but generally above normal temperatures, and we'll see if that kind of holds for that pattern tends to hold. So it just feels like we're going to start bringing more heavyweight cattle to the market. And with this reduction in slaughter, I think that's kind of the more negative factors and headwinds that we're going to have to face this week. So just keep an eye on that. It looks like the longs were really starting to add yesterday. So it just kind of feels like we're in this kind of supply bull market right now, and we're really trying to ration demand, and it's not going to change anything. The cattle on feed report's not going to change that sentiment from what it looked like.
Hey, Rylan, I had a question on that. We talked about, earlier, with the pastures being in good condition. How do you see that playing out? Are we going through a big time of expansion?
Well, that's
starting that process, or? Well,
that's right. What we're expecting, like we've got high prices, we've got low feed costs, and we've got good pasture conditions. So all those things need to hold. If we enter some massive drought and we just, the price of cattle starts to drop, and we start to go into another liquidation phase, these higher prices are going to get softer, for the most part. So we're kind of in that transition period. We're towards probably the tail end of the cycle of liquidation, where the supply in the U.S. is probably the tightest it's going to be in the interim. But, we're going to get a refresh on the numbers in July, on the July inventory report. And those numbers have typically always been, or at least for the past, 40 years, been higher. The July numbers are probably going to show bigger numbers than the January numbers. So the expectation is that we're at high enough prices to retain heifers to start expanding the herd. And especially with feed prices being where they're at, this is going to help it, but it feels like we still need to see inputs still come down. These prices need to hold. Packers need to support the market. And it would really help if the specs just kind of jumped on board again and paid up to $2, $2.10, in the back half of the market. The big problem right now is that the next 6 months, or the last half of the year, is the big question mark. And if that's too much of a question mark, the incentive for expansion will decrease. So I think it's there right now, but the situation and a lot needs to happen right in order for us to truly expand.
Well, very good. Just came into the open here. We got March corn up $0.015 at 408.5. March soybeans up 14 1/4 now, 11.50 1/4. And March Chicago wheat is up 4 1/4 at 581.5. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody's opinions and thoughts here this morning. It was a good conversation, and we look forward to talking to everybody tomorrow morning. Have a great day, and we'll talk to you soon.
Thanks, Dan.
Thank you.